Alrighty, so Egon, gold is making some major moves up. It had consolidated for 6 years in a tight range. Does that long consolidation mean we could catapult to a lot higher than most expect? What do you expect over the next 12 to 18 months, Egon?
Max, well, I've been writing about this for a while. I call this resistance line for gold in dollars the Maginot Line. Maginot was the defense minister for France during the 1930s. They built this defense line against Germany, and that was a very sophisticated defense line with underground cities and a massive construction. In spite of that, the Germans obviously did penetrate, but they went around. They went down through Belgium, and just like the Maginot Line broke during the Second World War, I was always expecting this 6-year line to break, and actually did forecast that it would happen sometimes in June. And now, we're off to the races. It's not, and there's a massive energy in gold here because it's been held back for 6 years, and reaching the old high max of $19-20 is nothing. There's no resistance now for gold, absolutely none, because we've already seen highs in most or in many currencies. It's just that the dollar has been a little bit stronger. But it's not gold going up. There's nothing to do with gold going up. It's just governments and central banks around the world destroying the currencies and destroying the world economy. That's what's causing it. Nothing to do with gold. Gold is just reflecting the mismanagement of the world economy and the massive debt levels in the world.
Right, good point about these other currencies. Gold is already making new all-time highs against Australian dollar. It just made a new high against the British pound. Almost every other currency out there, the gold is making new or at new all-time highs. The Indian rupee, the South African rand, Brazil, it's up 400% from the high. It's absolutely skyrocketing. So only in dollar terms is it lagging. But it appears as though central banks have completely lost control. With negative rates, and now a bank in Denmark offering, and I should point out Denmark is doing this, paying people to take out a mortgage. It seems like they are in a desperate situation, Egon.
Yeah, well, you know what, Max? The central banks are panicking. Now it looks like the US is in a good shape, stock market is high, unemployment is low, so why are they panicking? Well, it's very simple. Because the world financial system and the banks are bust. German banks are bust, as we all know, starting with Deutsche Bank with 45 trillion euros in derivatives, which is 13 times German GDP. Italian banks are bust, Greek banks are bust, French banks are bust. They haven't collapsed yet, but they are on the verge, and that the central banks know that. So they are panicking, and that's why we're going to see low rates, negative rates. You take Switzerland, for example. You can borrow today a 10-year fixed mortgage for 64 basis points. 64 basis points, that's 0.64%. That's basically free. You borrowed $10 million for $64,000 a year. Or $1 million for $6,400. It's absolutely nothing. So it's a mad world, and it's sadly going to end in a catastrophe, because this bond market is now so overbought, and rates still going to come lower. At some point, people will dump the bonds, and we might have high bonds, low rates for a year or two, but then with the money printing, it will all turn around, and we will instead have hyperinflation, and people will dump the bond market, and we will see a massive collapse of bond prices.
Right. Remember back in 1996, Alan Greenspan, who was then chairman of the Federal Reserve Bank, he warned that the stock market had entered a period of irrational exuberance. And then the NASDAQ melted up. It skyrocketed from that point forward, topped out, and then crashed 85%. And a lot of people are comparing this bond melt up to almost like a .com-like melt up situation that's just a completely speculative bubble. It's amazing that people don't recognize that the bond market is that's the bubble. It's the biggest bubble probably we have ever seen, Egon.
Absolutely. I mean, it's a roughly worldwide $100 trillion bubble, and we might see still slightly lower rates, but after that, yeah, I mean, I agree with you. That's going to be the most massive collapse, and of course, it will be also a debt collapse. And a bank collapse, and if not government default, so unlimited money printing by governments, i.e. Inflation, hyperinflation, and that's all to follow. So, if you look at investors now, so bonds even now, I mean, so there are 30 or almost $14 trillion of negative yield bonds today, and that's just unheard of. You cannot earn any return, and instead you have to pay money for a bankrupt government to take your money. That's just unbelievable. Who the hell wants to lend money to a bankrupt government? I wouldn't give them a penny. But this is what the institutions are doing with pensioners' money, with fund money, etc. It's absolutely crazy. Nobody's thought about yet buying gold. Gold costs nothing to hold today with these negative rates. It's actually cheaper because rather than lending money to the central banks and paying for it, at least you can buy gold for virtually no cost at all and store it for a very, very low cost. So, and gold is, of course, going to reflect all of this because, as I said, the race to the bottom of the currencies is just starting. And we are going to see, they've fallen already. They've fallen 98, 99% since 1971 when Nixon closed the gold window. They've fallen 80%, virtually all of the currencies, since 2000. All currencies have fallen 80% since 2000. Nobody knows about that because governments actually hide the fact that their people's money is being debased on a daily basis. So people are not aware, but they will become aware because there will be nothing else to own. Of course, everybody can't buy gold. I understand that. But gold is so undervalued. And as you know, I'm not a gold buyer. I'm not just looking at gold as the consequence of the massive risks in the world. I mean, we haven't even talked about the stock market, Max. The stock market, I indicated a few weeks ago that, we had these, what I call the four tops. Most of you are too young to remember the band, the Four Tops, of the Motown. The Four Tops, that was probably in the 60s, my time. But, they had four consecutive tops in the Dow, all with weaker indicators, i.e., it was clear that a crash was coming. We've seen the first 1,000 points down in the Dow so far. Now we have a small correction. The next one will be vicious, Max. The next one, I would expect that to be well below the 2018 December bottom. So I would see a fall. And that could be a rapid fall of maybe 5,000 points or more in the Dow once this turns. And that could be fairly soon. Within the next week or two, we could see that turn in the stock market. And then we're going to see a vicious fall. And that's just the beginning because we're turning into now a secular bear market worldwide.
Right. Speaking about bad habits, let's talk about Warren Buffett for a second. Because, of course, for years he has disparaged gold and said, it doesn't pay a return. And he'd rather be in productive assets. Well, now gold having 0% return is beating $15 trillion worth of sovereign debt that's giving you a negative return. So somebody like Warren Buffett, who's sitting on hundreds of billions of dollars of cash, he's about to be told by his banks that he's going to be charged. He's going to get a negative return. Will his stubbornness and ideological zealotry mean that he won't recognize the truth that he's been wrong about gold and he needs to diversify into gold? Or will he realize, hey, you know what, I've been wrong. I need to go from cash to gold. And won't that be the beginning of a stampede into gold, Egon?
Well, you're absolutely right. Of course, he hasn't got only got cash that he's going to lose money on. He's going to lose a massive amount on his stocks and on his investments. And any institution that now is going to go into gold, of course, they will all go into gold and they will all buy gold very high. And once they start moving into gold, they will have to pay up because, let's say they want to move, and a big institution wants to move $1 billion into gold. You won't get $1 billion in gold for one institution, and then you multiply that by 100 or 1,000 institutions. So what will happen is you will not get $1 billion worth of gold at 1,400 or $1,500, you will get it at maybe $10,000 or $15,000. That's going to happen. Institutions are going to get their gold, but it's going to be at massively higher prices, because we have to remember the paper gold market in the next move up of gold will collapse. And people will want physical, and there isn't physical around at those levels. All the physical that's being produced today, 3,000 tons a year, is being absorbed in today's very quiet market by mainly India, China, Russia, etc. And you can imagine when all institutions have to inflation protect their assets by buying, even if they only bought a couple of % of their assets in gold, that's going to be that gold is going up to the sky because there isn't enough. But of course, gold is undervalued, so I have no worry about gold going up to 10,000 or 50,000 or whatever it will go to. And that's going to happen because there just isn't enough gold, and it's been suppressed for too long now. And this is why we're going to see this eruption.
Right, it's amazing. I think of the $100 trillion or so in investable assets around the world, something like less than 1% is actually invested in gold. Well, let me ask you a question here. So we had Dr. Michael Hudson on recently in one of our podcasts, and he made the following comment, and I want your thoughts on it because you guys are in the top echelons of macro thinkers. He thinks that negative interest rates could get down to the point where some are actually negative 25%. Your thoughts?
Well, that's the end of the bond market. You know, who the hell is going to lend money, as I said before, to a bankrupt bank at minus 25% or paying 25%, and knowing that they're not going to get it back, the money, the capital they won't get back, and it costs them a quarter of the capital every year. So I think that's ludicrous. Before that, the bond market will have collapsed. Everybody will pull their money out of the bond market. And of course, there are not many alternatives, because you will have a falling stock market, you will have a falling property market, and gold can't take all that money. It's impossible.
Right.
And it will accelerate.
Absolutely. Egon von Greyerz. GoldSwitzerland.com is where Egon can be found. Now, thanks so much for being on the Keiser Report.
Thank you, Max. Great pleasure to talk to you, always.